What's up everyone, Dylan here. I wanted to hop on and do another episode of the short and sweet analysis video. I'll try my best to keep everything clear and concise and show you guys what key technical areas I will be looking at going forward. With that said, we'll hop right into it. So, very important, the S&P hit a macro trend line that spanned all the way from 2022 last week. So I'm going to go ahead and draw that just so that you guys can have it on your charts to, kind of gauge relative strength and weakness on future tests. Okay, so you take the January 4th, 2022 high, and then you connect that high to the July 16th, 2024 high, and you could see that's exactly where we tested on Thursday. So price came up there yet again. This was the third test over a span of, a couple of years, and that's exactly where sellers stepped in. Okay. On top of that, we also have another resistance trend line that has that just so happens to line up with that macro one. So I want to definitely point this one out. Okay. We have this one as well. And you could see it has acted as resistance right here back in early August 1st, 2024. And then again on August 22nd, 2024. And then that's exactly where it coincided with the other macro trend line. Okay, so going forward, you definitely want to keep an eye on this general area to gauge relative strength and weakness, right? Essentially, in very, very simple terms, if you're a bull, you want it to get above those two trend lines and hold value where dips above get bought, okay? On the flip side, if you're a bear, you do not want to see price break above that and hold. You want to see sellers continue to step in and defend that general area. It lines up right around, call it 58.30 and 58.40. So that 10-point range. As time progresses, the spread between those two lines is going to get greater and greater. So I recommend just putting it on your own chart so that you can follow it yourself and you don't have to rely on me to keep showing it. Okay, so those two areas are very, very important to the upside. Okay, going into a individual equity, I want to show you guys Apple. Apple has this level right here that it has failed at 3 times if you include today. So today technically broke above it and closed above it, but we still haven't taken out the high from September 20th, I believe. Yeah, okay, so from like 232.75 to 233.25, clearly that level has acted as tough resistance. So if you're a bull, you want Apple to break above and then stay above, and ultimately that should provide some inflows into the tech sector. Okay, so you guys know, like I talked about last week, NASDAQ is relatively weaker than the S&P on a larger time frame, right? And by what I mean by that is it's still about 4.6% lower than the all-time highs that it made in July, whereas S&P is right at the all-time high. So using that same reference point from mid-July, the NASDAQ is basically lagging by 4.5%. So if Apple breaks above that recent resistance and then is able to, kind of lift off from that area, it could definitely give the NASDAQ some nice inflows, okay? So that's what I would look at on an individual equity basis. And then NVDA also has a trend line that has rejected 3 different times, okay? You could see it rejected at all-time highs, June 20, 2024. Then again, it tested August 26th, and then again last Thursday. So if you're a bull, like I said, very, very simple. You want NVIDIA to take out this trend line, and then you want to see that dips get bought above the trend line, and hopefully it breaks out from there, okay? So that's another thing to look at. So One thing worth noting is the fact that the CNN Fear and Greed Index hit extreme greed as of today. Okay, what does that mean? So, first, to preface, it can stay in the extreme greed territory for the next 6 months to a year. Like, there's no expiration date, right? It can be extreme greed for, way longer than investors think, okay? What that means is that basically investors are very complacent right now, okay? And like I said, it could last longer than you think, but what it also implies is that the margin for error is pretty slim. So any bearish news that occurs in the next week, or for as long as that's in the extreme greed territory, it can set up for more aggression to the downside, because like I said, investors are complacent. The positioning might be lopsided a little bit. So any disappointment, whether it's from earnings or economic news, right? Anything disappointing can basically trigger a more aggressive move to the downside, because you'll have weaker longs that need to, get out. Okay, so I'm only mentioning it because it hit the extreme level. Anything other than extreme, I don't really pay attention to. Okay, so in terms of news, there's a few pretty big news events this week. Tomorrow we have the ISM and the PMI manufacturing. Wednesday you have ADP employment. Thursday you have jobless claims and the ISM PMI services. And then on Friday's the big one, you have the jobs report. And it's very big because the last 2 months were disappointing, and the last 2 months caused volatility because of the disappointment. So considering the last 2 months has been disappointing in terms of, what the actual data came out at relative to expectations, it's definitely, going to be very important to look at it for the third month. Okay, so that's that. So those are the upside levels. Like I said, S&P has the 2 trend lines. Above that is all-time highs. It's uncharted territory. You have the Apple line, and you also have the NVDA line to look out for. Okay, to the downside, and I continue to say this very, very clearly. As long as 5740 holds, the bulls are in control, whether you like it or not. Okay, and I continue to say that, and I will continue to do so going forward as well. So what I'm going to do to distinguish between these, I'm going to make the 2 resistance one red, and then I'll make the support one blue. Okay, so I continue to draw this line. I believe I've drawn it the last 2 videos that I've done for you guys. You could clearly see that this trend line stemming from August 22nd has been a very, very critical pivot point, right? It was acting as resistance from August 22nd to September 18th. And then once price broke above, right, you had the breakout, which was nice. Then that same line turned into support for a bounce to all-time highs, okay? So that's very, very important. And like I said, I'll say it again. As long as price stays above that, the bulls have control, okay? That's a fact. So only until that line breaches, and ideally for bears, breaches and then kind of tests that general area and fails on the retest, that's when you could justifiably kind of flip the sentiment from buying the dip to selling the rip, okay? So that's very, very important. So 5740-ish, that's the line in the sand for the bulls, okay? Now, if that does breach, okay, and with aggression, and the bears do a good job of keeping a lid on price beneath that, you want to make sure to validate that weakness with a strong VIX, okay? And here's the area that I recommend looking at. So I'm going to go ahead and draw a wedge, okay? We're drawing the wedge stemming from the high of February or my fault, the high of September 6th, okay? And then we're going to go ahead down here, taking it from the low of September 3rd and latching it on to here, okay? So this is on a 2-hour chart of VIX futures October contract. Basically, like I said, very simple. If S&P breaches that 5740 with aggression, you want to see the VIX break above that trend line, right? Break out of this wedge to the upside and have some momentum to the upside as well, okay? So if the VIX is still subdued and still within that wedge, if and when that S&P breaches that 5740, I would doubt that S&P continues to sell off much beyond that blue point, okay? So you want to definitely see the VIX break out of the wedge in tandem with the S&P move to the downside, if it occurs, okay? And like I said, this might stay above this 5740 for the next 5 months. Who knows? I'm just kind of giving you guys an idea of the key areas to really, really focus on and watch to kind of, gauge what the overall market will do next, okay? So if that occurs where the VIX breaks out of the wedge and the S&P breaks below that 5740, the next level to the downside remains that 100 moving average on the US 500, which is the S&P 500 cash index, okay? So that's another, you're still got another 4.6% to the downside. And if that 100-day moving average breaches and the VIX remains very, very strong, you could look out for future turbulence to the downside, okay? So that's that. And that's basically it. I'm going to cut the video there. If you guys like it, give it a thumbs up. If not, no problem. Let me know what I could do to make these videos better. Peace.